Hi everyone, thank you so much for joining me today. My name is Lydia. I'm the Fund Finance Queen, your money mentor online. Today I'm really excited to talk to you about ISAs. If you've never heard of what an ISA is, this is a great video to watch. Keep watching, folks. An ISA is an individual savings account, ISAs started in 1999 and they were replacing PEPs, so those were actually a different type of account. But these ISAs are created so that people can actually put aside tax-free money. So if you don't know this, check your savings account. You pay tax on your savings account every so often. So they'll go in, they might pay you interest if you actually have money in there, but when they pay that interest, they also take away their taxes. So putting money in a savings account and leaving it open for taxation is a little bit annoying. So we pay enough tax in this country, I will tell you that. So what I encourage you to do is set up an individual savings account. Now, the beauty of the individual savings account is that it is money that is taken after you've paid your taxes, of course, so it's only for after-tax money. However, what you need to remember is that once you have put that money into the account, it cannot be touched by the government. So since 1999, ISAs have given people the opportunity to set aside up to £20,000 a year tax-free. Now remember, you would have paid your taxes already, but the particular taxes that ISA saves you from are capital gains tax, inheritance taxes, and any profits from any stocks or shares that you would have traded within the ISA. These are pretty cool. So if you think about it, even if you have money set aside for your retirement, etc., this is a great way to save while ensuring that HMRC don't put their hands on your money. Okay, so a great way. So pay attention to this. They're based on people's having that $20,000 tax-free allowance, a great opportunity, and they also are exempt from other additional taxes. So there are 4 types of ISAs that we can actually tap into that I think you should be interested in. I'm not going to include the junior ISA, which is usually for younger people. I want to talk about the types of ISAs that people who are over the age of 18 qualify for. So think about this. You have 4 types of ISAs. Some of them are harder than others to understand. I'm going to attempt to explain as many of them as I can, and if you have any questions, throw them into the comments. So the first type of ISA is the most simple type of ISA, and this is a cash ISA. So you put money into this and you have an agreed amount of time that you can withdraw money, or an agreed amount of time that you can actually access that funds. So the first is the cash ISA, the second is the stocks and shares ISA, the third is the lifetime ISA, and the fourth is the innovative financial ISA. The cash ISA is for people who tend to have 10,000 or less in savings. It's a great way for you to put money aside, and you can decide how often you access that money. So some of the ISAs say you can take as much as you want, as often as you want out of it. There are others that limit you as to how much money you can take out of that cash ISA. So for example, if you're just getting started and you know you're going to need access to your money, you might need to buy a car, you need to do this, you need to do that. This is a great way to set that money aside in a cash ISA. But be careful what you sign up for, because the restrictions depend. So if you say, for example, you can only take out money once a year, that's something to pay attention to, because you might need it more often, especially if you're at that level where you're saving 10,000 or less. Now, as you progress in your savings, the next thing I might recommend is the stocks and shares ISAs. Now, with these ones, it's something that you really want to pay attention to. The stocks and shares ISA allow you to invest in specific stocks and shares within a tax-free umbrella. Isn't that cool? Because the hardest thing is when you've actually gone and you invested your money, you can find out that all of a sudden you're going to lose X amount of it towards capital gains. So it's an exceptional idea to think about this. And if you want to start growing, you've got a little bit of money and you want to invest, this is a great way to do it. So you can actually go into that ISA, use that money within a specific platform, and that allows you to grow those stocks and shares through investments. You can do it with bonds as well. It's a really good way, ETFs, you name it. There are so many ways you can actually use the ISA setting to invest. This is something I'd encourage you to actually research, because this requires at least some education. So take the time, understand how the stocks and shares ISAs work, dig into them, and actually make sure that you're of a good place as far as knowledge is concerned before you do this. But that is stage 2 as far as ISAs are concerned for me. Now, the third type of ISA, depending on where you are in life, is called a lifetime ISA. These I kind of like because they're good for people who are saving towards specific events. So it could be towards a wedding, it could be towards a house, it could be towards your retirement. It could be either of those. So pay attention and look at this. This might be something that would be good for you. So you could set aside that money as a lifetime savings fund. And remember, you only get $20,000 a year to put aside. You need to claim your tax exemption before the 5th of April. So pay attention to that as far as ISAs are concerned. That is if you're filing separately. Now, the last one is the Innovative Finance ISAs. This is the one that most people have never heard of, and I myself had to pay attention to and do research for. So this allows you to invest on a peer-to-peer lending basis. So think about it. You want to invest in a business and you want to be able to make sure that that investment is tax-free. So you invest in that business, it returns for you, then you can actually claim that as a tax exemption. So this is a great way for you to grow your investment outside of stocks and shares and bonds and ETFs, right? So this is something that I'd love for you to pay attention to when you get to that level. And I always say to people, only invest what you can afford to lose. Take your time, research it before you actually put your money into it. Because there's no point investing in it if it's a loser, right? So take your time and get to understand it. So key things I want you to remember when it comes to an ISA. The first is that you get a $20,000 tax-free exemption amount of money that you can save. The second is if you're not an employee, you still need to file those taxes and claim your exemption before the 5th of April. Okay? So those are the two things. Now, what are your next steps if you want to go up and set up an ISA? I would start with a cash one. Go to your bank, or don't even just go to your bank. We're not necessarily loyal to banks. Banks aren't loyal to us. So go online and find the ISA that pays the best in terms of interest. Interest rates just went down on August 1st, which is exciting news. So pay attention to that. Look around and see which particular ISAs pay the best in terms of interest rates. Then go and look to see if you can actually sign up for one of those. Don't just do what your local bank offers. Let's be honest with you. Banks depend on us to be not knowledgeable. I don't want to use the word ignorance, but banks depend on us to not care about how we spend our money. So it's your place to search online. This is why we have this wonderful thing called the internet. Go online, search and see who's offering the best type of return for your money on a cash ISA. Look it up, apply for that particular account and send your money there. Make sure it's a bank that is a reputable bank. Don't just go for any bank that doesn't have the kind of insurance that we need, but take your time, do the research so you can actually make sure that you're signing up for a legitimate bank and a bank that offers the best return for you. So once you've opened that account, so you do your research, you open the account, and the next thing I encourage you to do is plan to contribute towards that ISA on a regular basis. So if this is where you want to save towards your retirement, you could set aside X amount of your income to do that. Now, a good number that people tend to start with is 5% of your income. However, I'll be honest with you, not everyone can set aside 5% of their income towards their retirement. Take your time, do your research, readjust your budget, make sure you're in a good place so you can actually make that contribution on a regular basis. Set aside that money and make it automated so that you don't have to remember it, okay? That's a great way to actually set aside this money. Set it and forget it and know it's there forever, okay? So guys, that's what I would recommend that you do. This is how I encourage you to actually work towards it. And of course, if you get a lump sum, if someone surprises you and gives you money for your birthday, put it aside in that ISA, or take a portion of it, send it towards you, something you can spend for yourself, but the rest of it, put it aside in that ISA, and it'll be something that can grow for your future. So that's my brief spiel on ISAs today. Make sure that you have one, make sure you set one up, and make sure you contribute to it on a regular basis. And of course, if you have any questions, feel free to jump into the comments, and I only ask 3 things of you before I leave. Like this video, subscribe to my channel, and of course, share it with someone who you think would benefit from it. Thank you so much for taking the time to watch this video, and I'll see you on the next one.